Any plans to liberalize FDI or FPI regulations further?
I do not want to give a headline, but certainly we are looking at every aspect of reform.
How do we, this is probably the right time to, assure foreign investors to invest in India. What are some of the steps that we should take that would, give them this confidence? I mean, this one was a big one in itself, but going forward.
First thing, I think our institutions such as Parliament should debate issues, should question government on the proposals, on the policies, on government's actions. That gives confidence to people saying India's democracy actually literally discusses these issues. Without that, the government can go about doing what is right for the public. But the institution of the Parliament is not being used for its prime purpose. Why is it important? It gives a feeling that both the opposition and the ruling parties are talking on issues. Instead of holding placards and standing in the House, if there is a meaningful discussion, it will convey a lot about the policy strength. That is one thing. Second, our regulatory institutions, and I've said this before, but I'll repeat it here. Regulatory institutions should not go to the extent of micromanaging. I want businesses to do their businesses. They have powerful boards which run them. And the regulator, in consultation with the stakeholders, should allow them to function, of course, keep a watch, and do a soft touch regulation. If regulators across the board, I'm not talking just of the finance domain regulators, all over, should have a open-minded approach, a soft touch approach, above all, not micromanage businesses.
Private investment has been a topic of discussion. How do we revive animal spirits, for the private sector to invest? This has been a, discussion that we've been having over the course of many interviews, and you've been also exhorting the private sector. How do we get about?
But I think, to be fair to them, they are moving in.
Okay.
And they are taking decisions about how they want to expand.
So you see a significant change?
I see a significant change, and I see that enthusiasm now in wanting to understand how things will move from the industry. And I'm sure they are conscious that opportunities lie in India and they should do things.
How would you react to S&P's, India's sovereign rating by S&P, which has gone up? High time, would you say?
Yes, and it is, I think, as a result of a lot of work done by the Department of Economic Affairs, the Chief Economic Advisor. They have been persistent with talking with them, giving them adequate data-based information, and their conversations have actually today shown us the result. And I'm glad that they're doing it. They should continue doing it with other agencies also, because with our growth being with what it is, with our fiscal, macroeconomic fundamentals being what they are, with our inflation being under control, with our foreign exchange growing, with our stock market being so buoyant, it is difficult to understand how parameters of similar and comparable nature elsewhere attract a much better rating, whereas ours don't. And conversely, parameters which are worse than ours seem to be having better rating. Just can't explain it. So I think the work of the DEA and the CEA is well cut out in this regard. They will have to work with agencies.
Nirmala ji, you're right about all the macro indicators looking up. But revenue growth for corporate India has remained tepid. It's at a 7-quarter low of 3.7%. How do you explain that? GDP on one hand growing at 7.8%. What really accounts for this?
I think it's also a question of how they're deploying their resources and how they're earning out of it. Businesses will also have to look at the way in which their risk-taking capacities can increase, and that's what is going to be the prime mover in terms of revenues for businesses. So, but that's a business call. It's not for me to say.
Right.